Can Bitcoin really reach 100x in the next 2 years? This is the provocative question that's got investors and crypto enthusiasts buzzing. Why, you ask? Because if it does, it would catapult Bitcoin to unprecedented heights, painting a new picture of wealth creation. Remember, anything on this site is not financial advice, and you should do your own research. And please review the links in the description. Don't forget to like, subscribe, and hit that notification bell. But is this skyrocketing value possible? Or is it just a pipe dream? To answer this, we need to delve into the intricate fabric of Bitcoin's past, present, and future. So, let's dive into the fascinating world of Bitcoin to find out. Bitcoin, a decentralized digital currency, launched in January 2009, and the first Genesis block was mined on the 9th of January 2009. This marked the birth of a financial revolution, a new world of money that was no longer bound by the traditional banking systems and government regulations. Let's delve a little deeper into this fascinating technology. Decentralization is at the heart of Bitcoin. This means that no single entity or authority has control over the currency. Instead, it operates on a massive network of computers worldwide, all working together to validate and record transactions on a public ledger known as the blockchain. This decentralization makes Bitcoin resilient to censorship and immune to control by any government or organization. Cryptography plays a crucial role in Bitcoin's operation. It's the science of encoding and decoding information, and in the context of Bitcoin, it's used to secure transactions and control the creation of new units. Bitcoin transactions are secured by mathematical algorithms that are virtually impossible to break, providing a level of security that is unparalleled in the traditional banking system. In stark contrast to government-issued or fiat currencies like the US dollar or euro, Bitcoin is not controlled by any central bank. Its value is not tied to gold or any other physical asset. Instead, it's determined by supply and demand dynamics in the marketplace. Moreover, Bitcoin operates on a peer-to-peer network, meaning users can send funds directly to each other, bypassing the need for an intermediary like a bank. This peer-to-peer nature of Bitcoin transactions makes them faster, cheaper, and more efficient than traditional banking transactions. From its humble beginnings, Bitcoin has grown exponentially, becoming the #1 cryptocurrency by market cap, far outpacing other contenders like Ethereum. Its journey has been marked by volatility and speculation, but its impact on the financial world is undeniable. From its inception, Bitcoin has been a game-changer in the world of finance. It has challenged traditional financial systems and opened new possibilities for global commerce and personal finance. Bitcoin, like any other investment, has seen its ups and downs. This roller coaster journey has been a part of Bitcoin's story since its inception. Let's take a trip down memory lane to understand the highs and lows of this pioneering cryptocurrency. Bitcoin's lowest dip occurred in June of 2013, when it fell to $67.81. It was a time of uncertainty and skepticism, a stark contrast to the enthusiasm and optimism that surrounds Bitcoin today. Fast forward to November 2021, Bitcoin reached a thrilling peak, skyrocketing to a whopping $69,044. This all-time high was a monumental moment in Bitcoin's history, marking a staggering increase of over 1,000-fold from its lowest point. Now imagine someone who invested $200 at the lowest point and sold at the highest. They would have walked away with an astounding $203,600. While timing the market perfectly is near impossible, even a regular investment of $10, $20, or $25 during the low period could have yielded over $150,000 from a total $200 investment. That's the power of Bitcoin. However, as we stand today, Bitcoin is priced at $43,665. From this point, for Bitcoin to climb 100 times, it would have to reach a staggering $4,366,501. This seems like a daunting figure, and it is. It's a testament to Bitcoin's potential, but it also underlines the volatility and risk associated with it. The volatile nature of Bitcoin makes it a high-risk, high-reward investment. It's a wild ride, filled with exhilarating highs and nerve-wracking lows. But as the saying goes, no risk, no reward. And as we've seen, the rewards can be monumental. But remember, always do your own research before diving into the world of Bitcoin or any other cryptocurrency. For Bitcoin to 100x from the current price, it must reach $4,366,501. Now that's a head-spinning number, isn't it? But let's remember, Bitcoin has already proven its capacity for tremendous growth. In the past, we've seen Bitcoin surge from a mere $67 to an all-time high of over $69,000. That's over 1,000 times increase. A $200 investment back then could have produced over $200,000 at the right time. So is a 100x jump really out of the question? However, the cryptocurrency market is volatile and unpredictable. Prices can and do fluctuate wildly. And while Bitcoin's past performance has been remarkable, it's not a guaranteed predictor of future results. There are a multitude of factors that could influence Bitcoin's price, including regulatory changes, market demand, technological advancements, macroeconomic trends, and more. Perhaps one of the most significant factors is Bitcoin's limited supply. There will only ever be 21 million Bitcoin in existence. As we approach this cap, the scarcity of Bitcoin could drive up its value. This is a fundamental principle of economics. As supply decreases and demand remains steady or increases, the price goes up. But let's temper our expectations with a dose of reality. For Bitcoin to 100x, it would need to not just double or triple, but multiply its current value by 100. That's a monumental task, even for a powerhouse like Bitcoin. And while the cryptocurrency market has demonstrated its potential for rapid growth, it's also shown us its volatility. So is a 100x jump for Bitcoin possible? In the world of cryptocurrency, almost anything is possible. But it's important to approach this potential with a healthy dose of skepticism and a strong understanding of the risks involved. While it's a tall order, the possibility can't be completely ruled out. It's crucial to remember, though, that while the potential for great reward exists, so too does the potential for significant loss. Proceed with caution and, as always, do your own research before making any investment decisions. The Bitcoin halving, or the halvening, is a significant event in the life of Bitcoin. It refers to the moment when the rewards for mining Bitcoin are cut in half. This halving happens roughly every 4 years, and it's a built-in feature of Bitcoin's monetary policy. The purpose? To gradually reduce the rate at which new Bitcoins are created until we reach the maximum supply of 21 million Bitcoins. At that point, no new Bitcoins will be minted, and miners will have to rely on transaction fees for their income. Now, you might be wondering, why is this halving so significant? Well, there are a couple of reasons. Firstly, it creates a sense of scarcity. As the rewards for mining decrease, the supply of new Bitcoins entering the market slows down. This can create a sort of supply shock, where demand outstrips supply, potentially driving up the price of Bitcoin. It's the law of supply and demand in action. Secondly, the halving can influence the behavior of miners. As their rewards diminish, some miners may find it's no longer profitable to continue mining, especially if the price of Bitcoin doesn't increase to compensate for the reduced rewards. This could lead to a decrease in the network's hash rate, which is a measure of the computational power of the Bitcoin network. If the hash rate drops significantly, it could make the network less secure and more vulnerable to attacks. However, it's also worth noting that this event can cause high volatility. Traders may speculate on the price of Bitcoin around the time of the halving, leading to swings in price. This volatility can provide opportunities for profit, but it also comes with increased risk. So the Bitcoin halving isn't just a technical event. It's a pivotal moment that can affect the market dynamics, the security of the Bitcoin network, and ultimately, the price of Bitcoin. The Bitcoin halving is a pivotal event that could influence Bitcoin's journey to 100x. We've traversed the intriguing journey of Bitcoin in this video. We ventured back in time, recounting the birth of this revolutionary cryptocurrency in January 2009 and its groundbreaking decentralized nature that operates without a central authority. We navigated through its highs and lows, reminiscing about its lowest value in June 2013 and its peak in November 2021, which marked an impressive 1,000-fold increase. We also highlighted the potential of Bitcoin making a leap of 100x from its current value, which would mean reaching an astounding $4,366,501. This is a bold projection, but not an impossible one considering Bitcoin's history of exponential growth. We delved into the significance of Bitcoin halving, a fundamental aspect of Bitcoin's built-in monetary policy. This halving of mining rewards every approximately 4 years leads to reduced new supply, sparking speculation of Bitcoin's scarcity and potential high volatility. But remember, Investing in Bitcoin, like any other investment, requires careful research and consideration. What we've discussed today are possibilities, not certainties. The world of cryptocurrency is dynamic and unpredictable, teeming with potential yet fraught with risks. If you hold Bitcoin or plan to, put #BTC in the comments. In our next video, we'll explore another coin that could potentially make a 100x move. See you in the next video.